Let's take a look at this 20-year-old e-commerce brand in the computing tech and apparel niche that is making $303,000 a year profit and recently listed for sale by website closers at an asking price of $950,000. I'm going to go through this business listing here, pick out some of the key details, and share my own experience-based insight as someone who has acquired businesses and is looking to acquire more established and profitable online businesses, and ultimately my quick take on the business's valuation. Now, that said, as I'm going through the listing here, if you feel like there's anything I overlook or miss out on, be sure to let me know in the comments. All right. So let's jump into it. I have not looked into this any further other than what you've seen on my screen here. The keywords that really caught my attention with this one from the heading and caused me to open it and decide to turn on the recorder for it is 20-year e-commerce brand and growing the last 3 years. We'll talk about that when it comes to the valuation. So what else do we know about it here? We also have the revenue, $1 million, a little over $1 million a year in revenue, $303,000 of cash flow. Basically, it's turning out a 30% margin, and it's been in business 20 years. I'm going to come back to that because that's I think a very valuable point. You really don't run across many online businesses that are this aged. And I like, I'm focused on buying established and profitable businesses here. So I like them to be as old as possible. And they really don't get any older than this. So let's see what we got here. And if I like this one, we'll come down here to the listing details. It's a thriving e-commerce brand primarily selling on the Amazon platform. Has a rich history spanning 2 decades, specializing in a wide array of popular and specialized consumer products. It's carved a niche in the U.S. retail market with its innovative approach to retail e-commerce marketing. We'll call that out. We'll talk about that in a second. Offers a diverse product range that includes top-selling computer technology and exclusive apparel lines. Got a hybrid inventory model, which ensures robust stock levels, supporting a dynamic catalog. It sounds like a lot of buzzwords to me, nothing too substantial there. Operational efficiency is a hallmark of this company, driven by a dedicated team that includes financial and technical experts. Their commitment to superior customer service is evident. What else do we know? What else do we need to know? Or what else do we want to know? 20 years in business, $500,000 of warehouse stock value. Okay, that's quite a bit. 50% from sales of computer parts, 3,000 square foot warehouse space. They've got a big email list. 80% comes from Amazon, and they've got proprietary clothing production. This brand is in a strong position financially with the right working capital to support future growth initiatives. All you have to do is buy the business, and they've got 2 employees, which they call out down here. Okay, let's unpack it, starting with what the business does here. And this just seems a little weird to me, to be honest. There's no other way of saying it, but seems like they're selling computer parts and apparel, right? Like 2 totally different things on Amazon. I don't know what any synergy could be behind it. It just seems like a business that has 2 completely different product lines. Maybe they just were like, oh, let's try selling these, and that took off. Maybe at some point they tried selling other things, and this is what stuck. Yeah, it's a little weird to me, right? And they describe it as a wide array and a diverse product range. Personally speaking, I really don't like having a wide array or a diverse product range in any business, particularly one that's this small. I want it to be something that's kind of tightly bundled, where the products either complement each other or they lend themselves to repeat customers buying products that are related, and it all kind of synergizes together. Unless it's not really described well here in the listing, I'm not seeing anything that implies synergy between these computing parts and apparel. And it's even made more weird by somewhere down here they mentioned, I think, that they have a proprietary process for production of the clothing. Just do a Control F. Yep, right here, proprietary clothing production. Okay, that, to me, that is just weird. A, why are they producing it? Are they producing it? We really don't know. I just don't know what's going on. It implies that they're producing it, but with only 2 employees, I don't see how they could be producing the clothing, but still, right, for proprietary clothing production, they're, doing 50% of the revenue here. They're doing 50% of that in clothing sales, so $500,000 a year. It still just seems relatively small and kind of like a moot point or a vanity metric almost. And then they say this right here, this innovative approach to retail e-commerce marketing. Well, it may be innovative, but it's not necessarily working because the business is only doing $1 million a year in revenue. I don't really see any value to this innovative approach. I don't see any potential for value there. Inventory is huge. $500,000 of warehouse stock in a 3,000 square foot warehouse. They also said that they have a dedicated team, but down here they say that they've only got 2 employees. It's not a very big team. They may have 2 dedicated employees, but it's not a very big team. So as a buyer, I think that you're going to be pretty busy if you buy this business because you've only got 2 employees working. I don't know if they can really handle everything or what's going on, but there's not a substantial team behind it. And for just 2 employees, you've got a lot of warehouse space and inventory there. We don't know where the warehouse space is, but that would be crucial to know because as a buyer, you're going to have to do something with that inventory. Yeah, so I think those are the key details here. My take on it overall, well, I guess before I get to that, before I share my take on it overall, let's just talk about the valuation here. All right, now how I approach the valuation is I assign the business model as a whole a multiple, and then I look at what the forecasted profitability would be. This one's interesting because they explicitly tell us that it's growing. We don't know how much. You'd have to kind of flush that out once you got the CIM and, monthly data for a few years going back on the revenue and profitability, what you could forecast out from that. But let's talk about the valuation multiple here. You've got a business that sells on Amazon. It's got a lot of inventory, which is probably not included in this asking price. And when I point out the fact that it sells on Amazon, it's highly platform dependent on Amazon. It's platform dependent on Amazon. It needs a lot of inventory. It doesn't really have much of a team behind it. The products, from what I can tell, don't seem to be like anything amazing. It just kind of seems like random stuff. Like, hey, we found these products and they sell on Amazon, and here's this business that we have. We got to keep it going. I don't see this as, being worthy of a very high multiple. I think that at best, it's a 3x multiple. But, even then, I would still rather pay a little bit more, 3.5 or 4x, and get a business that does not require so much inventory, is not platform dependent on Amazon, maybe has a couple more employees, right? I think that there are better fish to fry for not much more valuation multiple. And that kind of puts me in a tough spot here because now I really don't know what to say about the valuation multiple. I guess let's talk about who could buy this and really value from it. Now, this would be somebody that's already in the Amazon space, and they're going to pick up 2 new product lines to sell. They don't need the warehouse. They don't need the team. They've already got their own, or they know how to, run a 3PL kind of thing, right? Like, they would buy it. And they, I think, would be in a position to pay a 3x valuation multiple on it. Because as soon as they do that, they're going to benefit from, economies of scale and the actual infrastructure that they already have. So I think it's good for somebody that is already in the Amazon e-commerce space. It's probably a great opportunity for that with a couple different product lines. But just for somebody looking to get into an online business coming from another space or other online businesses, it's not the right horse. It's not the right vehicle. But anyways, for somebody in that Amazon space, I think a 3x multiple is reasonable here. That said, somebody in that space might, might not feel like it's reasonable. They might say, hey, we could just dump a bunch of money into marketing and sell comparable products to it. I don't really know, but I still feel like, at 3x, it would be realistic for them. So if it's growing, right, we don't know how much it's growing. Let's just say it's $303,000 as the cash flow. And going forward, you could forecast it out to be growing at 15% in the next year, right? Now we assign that 3x multiple to it. It's actually worth more than the asking price. I'd value it at a $1,045,000 business. So I think ultimately here the asking price and the valuation is fair and reasonable, but that is for a specific buyer or for a buyer that is already in the e-commerce space and is looking to essentially bolt on more revenue and more profitability. That's my take on it, guys. If you're out there and you're watching this and you feel like there's anything I overlooked or missed out on, let me know in the comments below. And if you found this video helpful and insightful, you know the drill. Smash that like button to help me out in the YouTube algorithm. I am calling it a wrap and signing off on that note.